Hey guys, welcome back to another video on the Reaction channel. Today we are here to talk about Wednesday. We're getting ready for NVIDIA earnings, and while we're getting ready for NVIDIA earnings, the market has taken a little bit of a breather, and that is pretty much totally due to USO, the United States Oil Fund. We see oil is sky high. This is still silently moving in the background as the war in Iran. Same thing, silently moving in the background. You look at the news, you look at the headlines, you see that we're seeing, not a lot of new things. We see, actually, the current president did say that the Iran tech was postponed at request of Gulf allies. So we actually postponed an attack, which is probably good for now, but nobody really knows what's going on and not much is changing in that. So I wouldn't hold my breath on gas prices lowering anytime soon. But you can make money anywhere in the market, and that's what I wanted to highlight this video as we react to this short clip coming up. But this is Chipotle. This is just a totally random example. This is in the past 5 years, it's up 25%. At one point, it was up a lot more, but you're still up 25% in the past 5 years. Is this good? I would say no, I would not say that's good, because as a baseline, I'd use the S&P 500. I use SPY, and I'd say, this one is up 77% in the past 5 years, which you wouldn't have even needed to think. You could have just threw your money in here and you would have been up 77%. So is that good investing in Chipotle? Probably not. You probably didn't do the best thing, but at the end of the day, you didn't lose money. You still beat inflation. You made 25% in 5 years. So at the end of the day, you can't beat yourself up, but there's there's easy money, and then there's crazy money, something like Micron. If you put your money in this, you have 760% gain in the past 5 years. And you're sitting pretty well. You're sitting pretty, high on your gains right there. So I just wanted to show you can make money anywhere in the stock market. If you invest in the right stock, you can make 700+%. If you invest in the wrong stock, you could lose money while the market overall is making money. So it's all about where you allocate your money. It's all about diversification and risk allocation. Define your goals and risk tolerance. These are some steps to take when creating a portfolio. I know you guys watching this probably already have a portfolio, but you really just want to think, take a step back and look at, how much percent I have in this stock. Maybe I want to put more on the S&P. There's just a lot of things to think about. Maybe you don't want to hold stocks. Maybe you want to hold real estate. Maybe you want to hold REITs. Maybe you want to hold bonds. There's a lot of things to think about when investing, and this is a very important step in when you're investing. I want to show this because a lot of stocks are down today and my portfolio is up. If you guys check out the main channel, Miles Talks Finance, portfolio is up, stock market's down. That's one of those days where you pat yourself on the back and you say, I kind of picked a few good stocks. But let's get into the reaction video for today. We see it as a AI rally rolls on as NVIDIA outweighs inflation and rate fears by CNBC television. Let's get into it.
It's great to have you both here. Dan, I'm going to kick this one off with you. We just showed that chart of 30-year treasury yields versus QQQs. Are we overstretched here in terms of this AI tech trade and just how far it's run, how quickly?
Okay,
and I do want to say the market, in my opinion, is overvalued. I think there is opportunity everywhere, but I think the market as a whole is overvalued right now.
That's why it's so important in terms of NVIDIA earnings, because I think that's going to put just more fuel in this tech rally. We think tech stocks are up another 10, 12% rest of the year. Look, we're going to have some of these white knuckle moments, whether it was Iran, whether it's rates, special wars coming in, but it just continues to be the risk on trade, because this fourth industrial revolution, like we said, it's top of the third inning, one out, and that's where we are. And I think you're going to continue to see these dips get bought.
Why do you say especially with wars coming in?
Because I think
I agree with this completely too. We're still, I think that's a great analogy, is top of the third inning, one out. There's still so much more time in this game, and these little dips, people overplay them all the time. We see obviously inflation's going up, there's war, there's oil prices are sky high, but at the end of the day, AI is still on the run, and no matter how much sense or how little sense it makes, you can't change the price of the stock.
There's just worries, him coming in, what does it mean for tightening? Worries about rates. If you look at just like when any time a chairman comes in, what the stocks do over the next 3 to 6 months. So there's definitely nervousness. The bears will come a little out of hibernation mode, and you'll see them scare some of the bulls. But the reality is that we are still early in this trade in terms of AI. We'll hear from Godfather of AI this week, and that's going to be just another important data point in what we see as this plays out.
Yeah.
I mean, very true. He's talking about NVIDIA earnings. We're going to hear about that on Wednesday. So going to be a big day. And I mean, you see right here, this headline, stock futures point to lower open. S&P and NASDAQ coming off worst day since March. So it has been very, very green.
Best nicknames for all these different companies and CEOs. Vance, want to get your thoughts on this, especially given the fact that if you do look at some of the technicals, we are looking, at least within the equity markets, with oil higher, with rates having this big run up, overstretched.
It is in the short term, but I agree with Dan. You know, I think it's sort of a white knuckle moment where it kind of gives you a little bit of pause. But, you know, just move your stops up a little bit. I think you need to be a little bit nimble. But I think Dan's spot on. I think the market's going to go higher. I think he's right that, you know, the tech trade is still very much alive, and I think any pullback is viable. You know, our target with.
I mean, yeah, I totally agree with this as well. I mean, you look at the stock market. Every dip is a buy right now. You know, you're in a bull market. Everyone wants it, or not everyone wants it to stop. But I mean, you can literally buy whatever right now, and you're probably going to make a little bit of money. And this is going to keep going for a while. You know, I think NVIDIA is going to come in, crush earnings. Obviously, you know, there might be some fear. There might be some optimism. You never know, but we'll see.
7,800 on the S&P. It looks like we're going to get there by midsummer. And, 8,000 is in the sights.
How would you be playing the tech trade right now, Vance?
I would be nimble, but I would be long tech. I'm very bullish on it, and I can't see tech going. You know, I think we're going to get a pullback here, maybe 3 to 5%, which would actually be a gift. It would give us a chance to add to some positions that we like.
Exactly that right there. It is a gift to get a pullback right here, and we could add to a lot of positions that we like. I really like what he's saying. As a long-term investor, totally agree.
Put some capital to work that maybe we've been sitting on cash just a small amount, and I think it'd be a good chance to take the opportunity to buy some great equities.
I do want to dig a little more deeply.
Yeah.
Oh, go ahead. Looks like you're ready to go
No,
here.
but I was just saying, I think Vance makes phenomenal points in terms of these dips get bought. Look what we saw in March.
Yeah.
Tech.
Speaking of NVIDIA, wow, talk about a breakout ahead of these results. I mean, expectation that you're going to see revenue reaccelerate here in their new fiscal year, and perhaps even come in stronger than that for Q1. How do you see it?
The black leather jacket's getting ready for Wednesday because I think the street numbers still are underestimated. We think anywhere from
NVIDIA has beat, I think, on the past 23 out of 25 earnings, if I'm not mistaken. So not a crazy bold take from him to say that.
15 to 20% over the next few years because everything we've seen from our checks in Asia, from Taiwan, show demand and supply 10 to 1 for NVIDIA chips. You've seen it from AMD, TSMC, just go across sort of the food chain. And I think this is really going to be another breakout moment relative to the AI trade. I think investors are still, especially when it comes to physical AI, think about the China trade, when you think about H200s, that's not factored in. And look, the godfather of AI speaks. You'll hear a pin drop on trading floors because that is the most important thing in this market.
Vance, I mean, we also have a market that seems to be continuing to shrug off geopolitics here. For the most part, yes, we're seeing the...
Which is weird, I will say. You know, when the war just begun, the market was not shrugging off geopolitics, that is for sure. But for some reason, you know, the market just does not care, and AI just keeps running the way it's running.
Move higher in crude oil again this morning on the comments, and this idea that maybe perhaps you see a re-escalation to get to de-escalation, given the loggerhead we continue to see in the Middle East right now. China summit seems like a little bit of a nothing burger, dare I say, at least based on the information we have publicly. What matters to this market going forward? How much of this is NVIDIA? How much of this is a SpaceX IPO? How much of this is something else?
Well, I think that the nothing burger is a good thing. I think that nothing really coming out of China, I think, was probably what was kind of healthy because I don't know. You know, he went over there with an agenda. Maybe he met the agenda. We don't know. But, I agree with Dan. I think NVIDIA is going to go higher. I think that the trades that we're looking at are very, very positive. I'm really bullish on the market, but I think one caution that really throws caution to me is where the 10-year Treasury yields were headed over the past couple of weeks as they've headed higher. Is this an inflection that inflation's coming back? We sort of poo-pooed it last time that, it was transitory. Well, maybe it's not going to be transitory this time, but this energy effect, the cost of energy going up is getting to be a real deal that we're going to have to deal with. And it is the supply and demand issue, but energy is something that needs to be looked at. Inflation still needs to be looked at, and this 10-year Treasury yield going up needs to be looked at. So there is some caution that needs to be taken here.
Affordability versus...
Totally agree. Definitely err on the side of caution, but there still is a bunch of money to be made with AI for the rest of the year. I completely agree with what they're
This is
saying.
AI. This seems to be the nexus of the tug of war for investors here. Finally, Vance, I just want to get your thoughts on some of the names that you like here, because they're names that have already seen some pretty strong moves, but also I think arguably speak to the secular growth trends that we're talking about, whether it's Micron or Rocket Labs or even Cummins on the industrial side with AI build out.
And, and if you're looking at engines like Cummins, I think that's going to be a great play, especially for these data centers and what's going to be needed. But, you can also play it with an ETF, PAVE. They've got sort of a combination of different infrastructure stocks that are going to benefit from these data centers that are being built, everything from Caterpillar to Cummins engines to, concrete that's going to be needed. So I think there's a lot of great opportunity out there that's going to take place.
Yeah, I mean, you got to think you're going down the line when it comes to AI. There's, you got to build out the data center, you got to get the energy, there's so many things that go down the line. And to his point, there's a lot of ETFs that cover this as well. You look at SMH, semiconductor ETF, there's a lot of ETFs that are covering data centers now. Rocket Lab, maybe we have data centers in space, you never know, but cool reaction for today. That's all that we have for today's video. If you guys enjoy, be sure to smash that like button. Also subscribe to the channel. Be sure to check out the Patreon and Instagram link down below. I'll catch you guys in the next video tomorrow. Peace.